All right. Now we're going to get into the US dollar a lot today. And specifically, we're going to get into the British pound. So let's get right into it. I have a trade plan, and if you followed me long enough, you know that if I execute a trade plan, we got a real high propensity to make some serious money. So I'm pretty excited about this trade plan because I don't do them very often, but every so often things just line up beautifully. I put out a trade plan. Let's dive into it. I'll probably add to it tomorrow because I kind of got to the end of the day. But we've got some good basic stuff here. So let's look right here. This is from theeconomist.com, and I've put red arrows on the columns to pay attention to. And we're going to be trading pound US. So we're going to want to compare Britain and the US. So let's take a look at the very first thing, gross domestic product for this year. And you can see that the US and Britain both have expected to have 2% growth this year. So as a result, that is neutral. Remember that we're just comparing one country versus another country. And so in this particular case, if both of them are growing 2%, it's a push. That's not going to affect the currency valuation at all. Let's go over to industrial production, a little bit more sensitive, a little more volatile. United States down 0.7%. Britain up 0.2%. Now, the country with the strongest economy will tend to attract capital into it. It will tend to have higher inflation, therefore higher interest rates, therefore tighter money supply, and so economic growth is highly correlated with about a 6-month outlook on the currency. So here we're going to give the nod to the British pound. The British pound is going to be a little bit more bullish than the US. Let's go over to the next red arrow, consumer prices. Over the long run, over a 3-year period, the only factor that matters is in relative inflation differentials. You see, let's take a look at this example. The US has inflation at 1.2%, the UK at 0.7. That's a 0.5% difference. So all other things being equal, the US, because it has higher inflation, should depreciate by 0.5% per year. You just simply take the difference between the two and you look forward a year. So all other things being equal, the US dollar should lose 0.5% over the next year. Now 0.5% is no big deal. We could see the British pound move 0.5% tomorrow. So this factor is not going to be an important factor. Let's go down to the lower panel. Trade balance, minus $760 billion for the US, Britain minus 191. I'm actually going to count this as slightly bearish for the British economy, even though the US has got a much bigger number. I can't show it to you on here, but 760 billion for the size of the US economy is smaller than minus 191 is for the British economy. So I'm going to count this as very slightly bullish for the US dollar and bearish for the British pound. So far, we're pretty much scratched. These fundamental factors are coming up about neutral. Let's go to the next one, current account balance. US minus 2.6%. We'll just go to the percentage of GDP. Britain is minus 4.2%. That's slightly, and once again, we just compare, and the difference is 1.6%. That's slightly in favor of the US. And let's go to the final one over here, which is our interest rates, our yield curve. And the yield curve is the difference between the 3-month and the 10-year bond. So in the case of the US, I'm going to round these off, about 120. For the UK, it's about 1. A more positive yield curve is more bullish. So in this case, once again, I'm going to give the nod to the US economy. Now, let's carry on a little bit further. This is interest rate differential. So this shows the trend of interest rates. It's not only the level, but it's the trend. So if we look at this red line here, we can see that recently the US interest rates are going up. They're lower, but they're getting less lower. And it's the direction of the trend that's important, not the level. So this is slightly bullish in favor of the dollar. Okay, this is what really got me excited, though. We have weekly stochastic divergence on the British pound. We made lower lows on the British pound here, but the stochastic went up. That means that we should see a major trend change or a major counter trend move. Now that means that we should move at least up to 50% of this line, so up to 152. That's about 10 points. That's a pretty good move. Maybe we move up to this high, which is kind of half the distance between this high and this low. That would be a move up to about 159, so that'd be 1,700 pips. That's a pretty big move. And then, of course, theoretically, it can move into a super bull market and overcome the highs here and move up to these old highs, if not even higher. So this is what really triggered me to look at this more deeply, this weekly stochastic divergence. It's a fantastic indicator, very rarely wrong, and when it is wrong, it doesn't cost us any money. I like indicators that make us money when they work and don't cost us money when they don't. Here's the weekly chart. I'm sorry, here's the daily chart. So two things here. Number one, we got a reversal bar on the chart, and we got a conqueror buy signal. So my trading strategy here is to buy on the open tomorrow morning, or actually tonight. I'll probably buy it tonight, looking for us to move up to around 148, something around that level, 147 to 148, as just an initial or next leg up. We have a not clear bull market here. We're making higher highs. We're making, really, we just broke to a new low, so this is a mixed bag right here. So it's not a clear trend, but I've got two signals. I'm going to probably take the reversal bar, put the stop under here, but I'll decide that in a little while, and I'll let you know tomorrow. Now, there's one other factor. Oh, let me go over here, and then I'll come back to the other factor. So here we are in March. This is, there's two charts here. This is what the British pound is doing. Down here is seasonality. So as you can see, we have a strong seasonality here in March and April. So I'd be looking for at least a move up to the end of April in the British pound. This up here is a different form of analysis. This is called a correlated seasonal. And what they did is, this is more research, highly recommended. They went back to 1972, and they said, give us some years that are super highly correlated with this year's price action. In other words, the chart looks just the same or near to the way the chart pattern looks this year. It turns out they found 4 years that were similar to that, and the green line here is the blend of those 4 years. So once again, it's a bullish seasonality. It's supposed to have already started, and it's going to run a little bit later than the seasonality on the normal seasonality. So the correlated seasonality, a little bit bullish. So the seasonal situation is also bullish for the British pound. Okay, let me go back. So there's one other fly in the ointment here, and that is there's a referendum coming up. And that referendum is coming up in June, and it's should they leave the European Union? The currency is not part of the European Union right now, but what they should do is they should, but they want to have all kinds of changes. They want to pull out entirely. They'd even move out of the, right now technically you can go from country to country without showing your passport, although that's not exactly true. People can go from Poland to the UK and work, and I can tell you that when I'm in England and I go to a restaurant, nearly all the waiters and waitresses are Polish. They are not English. So that would all end. All those Poles would have to go back to Poland, etc., etc. So it would change the character of Europe quite a bit, So one of the things that's really been hurting the pound over this period of time is what they call Brexit, or Grexit, which is Great Britain exiting the European Union. They've already exited the currency. actually they never went into the currency to be precise, but they would completely fall out of what's called the European Community right now. So that's going to be the negative. Now, we've got 3 more months. They're campaigning. The head of the current government, Cameron, is promoting the stay in Europe. He renegotiated the terms of their entrance into Europe, and so that it's much more in favor of England. One impact of that is other countries are saying, wait a minute, if you negotiated that deal with England, then we want the same deal for us. So that negotiation is going to cause a lot of foo-fa-ra, to use an economics term, in England, or in Europe, I should say. There is a party called UKIP, UK Independence Party, UKIP, and they really mainly have just one message, and their message is UK independence. So that's kind of the leader, that party is kind of the leader of people wanting to get out of the European Union. Boris Johnson, who is a conservative, he's a member of the same party as the Prime Minister, he's also the mayor of London. He's very, very popular. Oh, by the way, he was born in America, which might account for all of that. And he is saying he's in favor of Brexit. So Brexit is Greece, Brexit is Great Britain. Okay, let me get that straight for you. So it's a real battle right now. The stays are winning the polls right now. My belief is that the UK will not pull out of the European Union, and that they will stay in the European Union, for the simple reason that it's there's no precipitating factor except for Syrian refugees, but England is not really taking any, so that's not a big issue. But that's a nagging issue. That's an issue of, hey, we don't want these people to come into our country. I think, though, that what will overcome that conservatism, which is to, because England has brought in huge numbers of immigrants in the past. The national dish is now Indian food, because nobody wants to eat English food, and so on and so forth. The non-English people have penetrated the country, so that really England is not an English country anymore. It's a multicultural country like the United States is. So I think that what's going to happen is that they will vote to stay in the European Union. Right now, I'd say 55-45, high 50s, low 40s, something like that. But in the meantime, the biggest threat to our position will be that that'll be the biggest threat to our position will be that vote. Okay. Now that's also the reason why we're going to be making a ton of money, is because the UK pound is going to become so cheap that it's just not going to be, we should be able to buy at such a cheap price. We'll have to watch the polls very, very closely, but I'm sort of sitting here saying this could give us an opportunity. In addition, we don't have to carry the trade through the vote. We can just keep, trade, be in the position for the next 30 days, the next 15 days. We don't have to carry it all the way to June, all right? So basically what I'm doing is, let me go back, I'm going to start by using the reversal bar. I'm going to put my stop loss at the bottom of the reversal bar, and that's going to be my trade that I will do probably this evening. Yeah, so we obviously have to keep an eye on the polls. That's going to be the same thing. Diane is pointing out Scotland, which voted to stay in Great Britain. They could also re-vote that, but being realistic, that would take a year or so for them to be able to re-vote. But yes, that's a possibility. Also, Ralph is pointing out we could do pound-euro, but the reason I did pound-US is because pound-euro, they're both going to be shaken by this whole experience. Neither one of them are going to do well as far as I'm concerned. So that's why I kind of went versus the U.S. Well, this is a good point. Ralph says, who would want to eat mushy peas in Great Britain? Jonathan must not be on tonight. And of course, that is the pinnacle of English cuisine. Overcooked, overboiled roast beef and mushy peas. It just doesn't get any better when you're over there. All right. All right, let me carry on. So this, I think, has the potential to be a big winner for us. 8, 10 cents, 20 cents, but at least, you know, back up to the old highs, and that could be a big winner for us.